Hey, my name is James Nicholson and welcome to the first property news of 2025. There's a lot to go through. There has so much happened in the last month or so, and some of it's been good, some of it has been really bad, some of it came from the blind side and is going to impact landlords significantly in 2025 and beyond. So some of this you may know already, but some of it you probably missed as well. So I think it's important to really recap and understand what has been happening in the world of property in the last month or so, and what can we expect going forward. Now, if you're new around here, this channel is all about property investing, house prices, and really getting a good property education. So make sure that you really can follow this channel, and the best way to do that is to subscribe to the channel over there and hit the bell notification. We're on the way to 34,000 subscribers, and let's make more people aware of this video because there's a lot of juicy nuggets that you need to know. How can we do that? We can all smash like, tickle like, whatever you need to do to that like button. Do something to that like button. That really helps with the YouTube algorithm and gets more views on the channel. So thanks to everyone that does that. So let's get to it because there's a lot to go through here. We've covered so many things this month, even with a Christmas break, but some of them have been really, really bad and not always for landlords. First off, I want to talk about rents. So in the last 3 years, rents have surged. We know that. We've talked about it not once, not twice, probably about 10 times. They have gone up on average 27% and £3,240 per property in the UK. Now, is that on pace with wages? No, wages went up 19% in that period. So there's a big disparity there. And remember, we had that high inflation with higher shopping and all those goods, and they've just stayed high. They haven't gone to deflation. So people are really, really struggling. Now, rent increases have slowed down. That's because mortgage rates have started to come down, but there's still a smaller pool of landlords. I did a video on this in more detail. So if you want to know more about this one, do go and check it out on the channel. But the rental pool, the amount of rental stock is the same as 2016. The population has grown significant. That shows this is not great if you want to rent a property. What else? Well, this one snuck in there. This was the most popular video in December. And this was something called selective licensing. So selective licensing is a council initiative, and previously councils had to get permission from government to enable them to be able to have selective licensing in their town. Hastings, I rent properties out in, they've had it for years. Now, selective licensing, a new rule passed on the 23rd of December. So make of that what you will. It's not going to get much attention at that time of year, is it? So sneaking it under our noses that any council in the UK can now have selective licensing without permission from central government. Basically means they're all going to do it. Why wouldn't you do it? It's a tax on landlords. Local residents aren't going to be up in uproar on that one, and you're going to raise significant money. Now, the goal of it is to improve the rental stock, improve the quality of landlords. But I can tell you from first-hand experience, I have properties in Hastings, I pay my license, and nobody has ever looked at my properties. They have no idea what the quality of them is. Now, they are good because I've done refurbishments on both of them down there, but they don't know that. And so I pay them 500 quid. And for that 500 quid, I tick a few boxes. I say that I'm a fit and proper person. They don't check if I am. So it's just a cash grab, a money generating exercise. And this is an additional cost on landlords that will get passed on to tenants and probably won't help with that rental price at all. Selective licensing, I did an in-depth video on that in December, just before Christmas. So go and check that one out as well. Next is house prices. So house prices, according to Nationwide Building Society, for the year went up 4.7%, slightly above inflation. And that was interesting because the top of the market is really struggling, not much movement there. but we did get more transactions and completed sales than 2023. The market was busier. A lot of that was at the back end of the year. A lot of that was stimulated by interest rates going down, mortgage rates, more importantly, going down in the summer. That got the market moving again. So house prices, we've done content on that. If you want more detail, go and check that out. Now, here's where you might think I'm going to contradict myself. Asking prices. These are down on average 12k. Now, I made a video about this, and this is the Rightmove asking price. It doesn't mean the property has sold. It could go lower. People could lowball those offers, or it could stimulate a bidding war and push them up. That's probably not likely. But what it does show is that going forward, maybe the data that we see after April, because we've got the stamp duty rush, which I'll explain in a minute, that's going to keep the market going for a while. But the asking prices are starting to come down. Now, if there is going to be a drop in house prices, sold prices, it starts at asking prices. So when I make a video saying asking prices are down in one video, house prices are up in another, two things can be true. Two things can be true. The house price sold data, the transactions take a few months to go through. So they already agreed those prices in September, October, November. Asking prices today are down, which means that data for sold prices in March, April, May, that's when we will know for sure if that resulted in lower sold prices. So that's what you want to keep an eye on. So asking prices had 2 consecutive months of drops, and that is a sign that the market may be slowing down. It could also be just a seasonal thing because it does slow down in December. Next is stamp duty. Stamp duty got hiked in the budget for buy-to-let quite a lot. That was really unfair on a lot of people because they were doing transactions that were completing that day and they didn't get done, right? And so that was a nightmare. But they're also going up significantly for first-time buyers on April the 1st, massively. I've done more content on that if you want more details. This is going to drive transaction volume until March. You could buy a property. You could go and view a property today as a first-time buyer. If there's no one in the chain, you could complete before the end of March. It's still possible if you get a good solicitor, good mortgage broker, and a good estate agent. That is possible. So there is still deals to be done. Estate agents are seeing lots of applicants at the moment and lots of viewings. So we'll see. The market is expected on all data sources. They're all saying we expect the first quarter of 2023 to be busy. So that will happen. You will get transactions done. House prices may not drop significantly until after April. That's what we want to keep an eye on. So stamp duty is going up. In America, they cut rates. So the Federal Reserve cut rates by 0.25%. The UK didn't. The Bank of England didn't follow suit. But also turned the markets on their head was the fact that after the Federal Reserve cut rates, they said that we are not going to be cutting as much as we thought in 2025. The expectations were that they would cut 4 times. They said they will be cutting twice. That's what their new expectations is. The stock market didn't react well to that, and they had 10 days plus of drops in the stock market after that data. The market isn't liking that, and they want to see rate cuts in America. And if that happens, it could impact the UK, the Bank of England cuts. Although I'm going to cover that in a second as well, what the Bank of England is saying. Mortgage rates, that's what you want to go down. And in December, wasn't great. We had rate increases from some, rate decreases from other. They kind of evened out, right? It wasn't much either way. It wasn't great in other news. And so, yeah, we've had a few small cuts to start this year. We'll be doing some content on that once we've got more details. We've got some lenders that we also know are going to be cutting rates in the next week or so, but not much. We're not looking at 0.5% cuts or stuff that we saw in the summer. It is going to be slow because they are busy at the moment with lots of applications with people trying to complete before the stamp duty increases. So they don't need to cut. Even if the Bank of England did cut, they don't need to. So mortgage rates, I think for the next month or so, you will get a little bit of fluctuation just so they can get some headlines, but I don't think you're going to see any massive cuts. No one is going to be cutting 0.5%. Could be wrong, but I just don't think that's going to happen. So that's one thing to consider. Inflation this month was up a lot. And so we went from 1.7 to 2.6. Huge jump. It's expected to potentially go up as well to around the 3% range. That's not good. We need to get this inflation under control and beat it. What isn't great is, my personal opinion on this, is the government aren't doing enough with the energy crisis. The energy is what's pushing up inflation. It's what's costing supermarkets more money. That isn't great, right? And so we have the highest energy costs in the world, 4 times higher than a lot of other places. That means no big companies are going to invest in the UK and grow their businesses here, because if you're a factory, why would you build it in the UK where the energy costs are so high, and that's one of your biggest costs of your business? You'd go somewhere else where it's cheaper. And so until we sort that out, we are going to absolutely struggle to get this inflation sorted. And I think the government should be doing more to sort out the energy crisis. It doesn't seem like they're doing enough fast enough. So inflation went up. The Bank of England, what did they say? So they did some interviews around the time that the Fed just did their cut. They didn't cut in December, but they did make it clear that they feel that they will cut 4 times in 2025. The markets expected them to say 2. That's good. Reclarification that even if inflation goes up, they still think they're going to cut because jobs and unemployment are potentially going down. In the budget, we had an increase in national insurance and the minimum wage. That's hitting employers hard, and there are already big companies saying they are going to be cutting their workforce because of that stuff. And so the Bank of England might have a difficult decision. They've got to potentially cut to help unemployment, but they've also got to work on this inflation stuff as well. So it's a difficult fine line to cut here. What also happened last month, this one was probably one of another sneaky one from the government. EPCs, more conversations about what the EP legislation is going to be. That stands for Energy Performance Certificates. Now, here's where it got not great. We knew that the Labour government want to make it so by 2030, private landlords have to have a level C or above. We know that, right? However, what we need clarification on is if you can't get to level C, some Victorian properties, you can't. It's just not an option. So they leaked out that you potentially would have to spend £10,000 as a minimum to get your property to a level C. If you spent £10,000 on improving energy efficiency and you didn't get a level C, then you would be able to rent your property still, right? That was one thing that we knew, and that's what's being talked about here as well. Here's where it got really bad. They're saying that potentially you need a new EPC every tenancy. Here's how this could get bad, because there's another bill that Labour have called the Renters' Rights Bill. That means that you have rolling tenancies. Your tenants can give you notice after 2 months. So you can have to get an EPC to rent your property out to them. 2 months later, they give you notice. You would, if this happens and this got legislated, you would have to get another EPC done 2 months later, even though nothing has happened. And that's because they're saying that potentially the property could get less energy efficient over time, and that needs to be noted to potentially people that want to rent the property. So that is a big problem, that you might need to get a new EPC, like a gas safe certificate, every single year. It's just not needed. Gas safe, of course it's needed. It's the safety of the property. But EPC works are major works. You know, if you put double glazing or insulation in, you don't need to do a certificate every year. That's what's potentially being proposed, and that worries a lot of people. So that's what's happened so much has happened in the last month. I'm sure we're going to have a busy January as well, and that's why you should subscribe and hit the bell notification. So many things. The two things, if you're a landlord, that I really would suggest that you go and check out the older videos that I've made in the last couple of weeks on are the selective licensing and the EPC stuff. They're two of the biggest videos that we had last month, and you really need to know what's going on. Give me a hand in getting more people aware of what's happening in the market by smashing like or commenting, even if it's just to say hi. I personally reply to every single comment on the channel. Do check out all the other content on my channel as well, including this video right here.